Hello, good evening, everyone. Welcome to Business Live. Coming up in this bulletin, Ghana saves $1.5 billion as investments made from crude oil revenues since 2011. Also in this bulletin, Ghana Revenue Authority steps up efforts to close the widening gap in VAT payment as it inaugurates a new compliance and enforcement unit to ensure regular payment of VAT.
The revenue, and that gap is huge, and therefore if you have such a huge gap as tax administration, as GRA, as our core mandate, then we need to put the resources and focus that the state has placed on us to ensure that we reduce this gap.
Plus, Ghana Railway Development Authority seeks private sector support to run passenger train service as it spends about 2.5 million cedis monthly to sustain its operations.
That is what we have to understand about why passenger service in the railway transportation is very difficult to come about. Once you are able to put out there, people will understand.
We have details of these and more lined up for you. Please stay. Thanks so much for your company. I am Pius Kojobaka, and looking at our stories, Ghana has been able to save some $1.5 billion as investments made from crude oil revenue earned since 2011. This was contained in Ghana's petroleum accounts held with the New York Federal Reserve Bank. The accounts showed that Ghana Heritage Fund, which has been set up aside for the future generated, had $1.3 billion, while the Ghana Stabilization Fund also raised some $122 million. Now, the financials again revealed some $66 million had been withdrawn from the accounts during the year under review, while the net income of Ghana Heritage Fund was more than $25 million. In a related development, Ghana has earned almost $12 billion as total receipts since the country started commercial production of crude oil from 2011. And this was also captured in Ghana's petroleum accounts with the Federal Reserve Bank of New York. More in this report.
These are monies that the country realized from the total petroleum receipts from all sources over that period. That is, royalties, carried and participating interest, corporate income tax, surface rentals, and other inflows. The value of shipments since 2000 and 2011 stood at more than $9 billion, whilst other receipts like corporate taxes reached more than $2 billion. Ghana National Petroleum Corporation also spent about $2 billion when it comes to the equity financing cost, whilst it earned some $1.4 billion in terms of the share of crude oil that it had sold over that period. Government has also disbursed some $4.8 billion when it comes to the annual budget funding amount. These are areas that government should disburse the funds when it comes to how the petroleum funds should be used in the country. The statement of account also showed that Ghana ended 2025 with a closing book value of $1.5 billion when it comes to earnings from all our oil funds.
Meanwhile, the Executive Director of the Center for Environmental Management and Sustainable Energy, Benjamin Isiah, is calling for increased investment in oil exploration to boost production and government revenue. He spoke to Joy Business.
Most of these wells are becoming maturing wells, so output will continue to decline until we begin to develop them or begin to engage in more operational activities to explore other areas of improving output, because these wells have been in existence for the last decade, and for that matter, output is also declining. And I think that we need more investment in areas of exploration and also areas of expanding some of these wells or doing some developmental activities so that we can increase output. If we are able to increase output, I think that revenue will continue to slide or will continue to plummet. Its sustainability depends on inflows from oil proceeds as well as good decision making in terms of our investment of some of the proceeds from this oil output. If we're able to invest in better securities or better government coupons, I think that at the end of the day, those interests will plow back into the PHF. If we're unable to do that, it will continue to harm us. The other side also has to do with output, as I indicated. If the output continues to decline and prices are not favorable, the Petroleum Holding Fund will continue to decline, will continue to decrease.
Away from the oil and gas sector, Associate Director Deloitte West Africa, Dennis Brown, has called for improved policy coordination between the Bank of Ghana and other fiscal authorities, noting that such alignment is crucial to reducing lending costs and boosting confidence among businesses and investors. According to him, weak coordination continues to undermine the effectiveness of monetary policy, especially at a time when the rising risk margins are limiting the impact of recent policy rate cuts on lending rates.
The Bank of Ghana governor has indicated severally in some of the press conferences that they have ensured that there is proper policy coordination between the Bank of Ghana and the Ministry of Finance and other fiscal authorities, so that they are all moving towards the same objective, although they have different and distinct roles, right? That has to be improved further. And that, I believe, is what can, result in a significant reduction in these risk margins. Because all these factors, as we listed them, for most of them, we have indicated Bank of Ghana to work with other fiscal authorities. Of course, for some of them they would have to rope in the banks, the lenders themselves, because you still want to retain some discretion at that level to encourage competition. We run a free market system, so you can't just say everybody should give out loans at the Ghana reference rate. Every one of them will look at their own assessment of the project in front of them and pricing the risks. But we also don't want a situation where they have such a huge margin of discretion that they can abuse it. And it's important that that is guided as well. The impact on that, if they can achieve it, will be to significantly reduce borrowing costs. And when borrowing costs is reduced, overall cost of capital goes down. It will improve access. Businesses and investors will, find capital cheaper, and then we'll invest in the high growth segments of the economy, expand the economy, create more jobs, going forward.
All right, so let's bring in the views of a senior finance lecturer at the University of Ghana Business School, Dr. Benjamin Amwa. He joins us via Zoom for us to have a conversation on the back of the reference rate cut. Now, thank you so much, sir, for agreeing to speak to us here on Business Live. What's your view on the reference rate for February 2026 expected to ease marginally to 14.58%, we are learning?
Thank you. The expected rate decline is not surprising because of the 250 basis point cut in the monetary policy rate. If you have observed the rate cuts and its impact on the Ghana reference rate, one will expect a decline. And from what we have seen in the past, anytime there's a rate cut from the monetary policy committee, it also shows in the Ghana reference rate. So just as you have stated, we are all expecting that come the February Ghana reference rate review, we will see a reduction in the rate.
Dr. Amwa, given the projected decline in inflation to 4.9% by the end of Q1 of 2026, how will this affect the real interest rates faced by borrowers, and what are the potential implications for investment and consumption?
Okay, if you are talking about the real rate on investment, then one will have to first look at the stated rate or the quoted rate on the investment instrument that we have available. And then also for that same period that investment to be held by the individual, what will be the inflation rate at the end of the period. So it is at the end on the investment that will now compare the inflation rate at that point in time vis-a-vis the promise rate on the investment when the individual purchased the investment. Then we can do the deduction of the inflation rate from the achieved nominal or quoted rate.
Really, what are the potential risks to Ghana reference rate outlook, including external factors such as geopolitical tensions and economic trends, as well as commodity prices? All right, so I understand Dr. Benjamin Amoy's line has frozen. We shall rectify that and bring him on stream to speak to us here on the subject matter, which of course has to do with the reference rate expected to drop in February. And we are looking forward to having a fruitful conversation with Dr. Benjamin Amoy. As in when we do have him, we shall bring him on to conclude his point for us on the subject matter. But still within the financial market, the secondary bond market activity edged modestly higher over the week, with turnover rising 20.69% week on week to 6.39 billion cedis. We have more for you in this report.
According to the Data Bank research, the development reflected steady but selective participation. It said investor flows remain concentrated in the belly of the curve, where 2031 to 2034 maturities accounted for 60.9% of traded volumes at a 15.59% weighted average yield. The 2027 to 2030 segment accounted for 25.3% of the activity at a weighted average yield of 14.43%. Long end saw limited participation, with 2035 to 2038 tenors contributing just 13.7% of volumes at a 15.98% weighted average yield. The research pointed out that the recent policy rate cut reset the pricing backdrop, driving a broader repricing lower across the curve. It added that in the coming weeks, investor activity is expected to remain anchored in the belly of the curve. Returns will also remain attractive without materially increasing duration risk.
You're still watching Business Life. We have more for you after this break. Hello again, welcome back to Business Life. And I would like to go back to our earlier story with Dr. Benjamin Amoy with respect to the reference rate expected to ease further in the coming days. Thank you so much, sir, for rejoining the connection. And earlier you were making a point, but my question to you was, what really are the potential risks to Ghana's reference rate outlook, including external factors such as economic trends and commodity prices? All right, it seems we are having some difficulty reaching out to Dr. Benjamin Amoy, and when we do get him, we shall bring him on to speak to us here on Business Life. But we've got to touch on one of our leading stories. The Ghana Revenue Authority is stepping up efforts to close the widening gap in VAT payment. This has led to the inauguration of a new compliance and enforcement unit under the Domestic Tax Revenue Division to ensure VAT is paid accordingly. Commissioner General of the Ghana Revenue Authority, Dr. Anthony Sapon, disclosed this to Joy Business, that enforcing VAT will boost state revenue and help in achieving the mandate of the authority. Here's a report.
According to the GRA, value-added tax has the potential to boost the country's revenue mobilization if the law is well applied fairly across the country. The inauguration of the 26-member enforcement and compliance team is part of strategies by the authority to ensure that the wide gap in VAT collections are closed before the end of this year. Commissioner General of the Ghana Revenue Authority, Anthony Sapon, told Joy Business that the unit will be resourced to increase VAT collections from the current 40%.
We are only achieving 40%. That will mean that there's a gap of 60% that we need to fill to bring in the revenue. And that gap is huge. And therefore, if you have such a huge gap, as tax administration, as GRA, as our core mandate, then we need to put the resources and focus that the state has placed on us to ensure that we reduce this gap to a considerable minimum. Because we believe that when we enforce VAT and we carry on the reforms as it is, the revenue of the state will go up, and it will also allow the government to deliver on the mandate that it has promised Ghanaians.
Commissioner for Domestic Tax Revenue at the GRA, Dr. Martin Yamboriga, charged the team to act firmly and professionally to ensure taxpayers' rights.
We encourage taxpayers to seek guidance and make use of available support channels and engage openly with the GRA. The compliance and enforcement team will act firmly when necessary, but always professionally, impartially, and within the bounds of the law. To the members of the newly inaugurated team, I wish to congratulate you on this responsibility. You are entrusted with upholding the integrity of the tax system. Your work must be guided by professionalism, accountability, and respect for taxpayers' rights.
The 26-member committee is made up of officers from the various divisions of the Ghana Revenue Authority and to be chaired by the Commissioner for Domestic Tax Revenue, Dr. Martin Yamboriga.
The Ghana Railway Development Authority is seeking private sector partnership to be able to run the passenger train service on the Tema-Ibadan railway line. Acting Chief Executive of the authority, Dr. Frederick Apor, in a media encounter, disclosed that the government spends about 2.5 million cedis a month to maintain the ongoing passenger service between Tema and Afenya. He therefore stressed that the service is capital intensive and needs more support for the service to be sustained to diversify the country's transportation sector.
Why railway, you need to make an economic case. So whilst railway is much more of about capital intensiveness, it is much more also about looking at the political sphere and the social economic development as part of it. It is not just as, okay, it's like trotro, you run, you make money. No. The financial comes through, and I'll talk about it in the freight. Because if I'm taking freight and I'm moving container from Japan to Tema Harbor, I could be charging $10 per ton per kilometer. They'll pay. And I'll use that to cross-subsidize the passenger service. You see, so that is what we have to understand about why passenger service in the railway transportation is very difficult to come about. Once you are able to put out there, people will understand the capital intensiveness of nature of the railway sector and what it takes to run it. So simply put, we have made around 700,000 cedis since 1st October. But we are spending over 2.5 million every month to sustain it. So it is a public service obligation and a social policy.
And to some other stories, the Electricity Company of Ghana has issued a public alert warning customers against fraudsters exploiting payment processes, stressing that it no longer accepts physical cash for any transactions. Here's a report.
In a notice to the public, ECG announced that it has gone fully cashless and does not request payment for its services through phone calls. The move is aimed at strengthening controls and protecting customers from financial scams. The power distributor advised customers to ensure that all payments for electricity services, fees and bills are made only through officially approved channels. According to the notice, payments must be initiated personally by customers using the ECG Power app or the company's short code *226#. ECG cautioned the public to treat unsolicited calls or messages demanding payment with suspicion, emphasizing that such requests do not originate from the company. Customers were urged to remain vigilant and verify all payment demands before taking any action.
Despite the recent surge in gold prices, President of the Ghana Chamber of Mines, Michael Akafia, says mining firms will not be complacent, citing the volatile nature of the markets. Gold prices have seen dramatic reversals, with spot gold falling nearly 10% at one point. Mr. Akafia, who is also the Vice President of External Affairs at Goldfield, said while higher prices offer opportunities, companies remain cautious, balancing profits with the need to sustain operations. He made these remarks while interacting with journalists of the Africa Extractives Media Fellowship.
The worst thing is to be complacent. In fact, the best thing is not to lose competitiveness. It's to become complacent based on current gold price, because you know that what goes up comes down. So the way you configure your mind now is to prepare you for that, because the longer the boom, the longer the bust period. That's how cycles work, unfortunately, and it's like that. If it goes, it's like a fall. Anything that goes up, the harder the fall, the higher the rise, the harder the fall. And so you must be thinking, you've been doing this for a long time. So those things you put money in should put you in readiness for that price crash. In fact, because of that, when we are doing our budget, we try and be more conservative than the current gold price. We don't use the current cash price as for our budgeting. And so that is so anytime, every time we are assessing our performance, we try and assess our performance regardless of gold price. We say take out the gold price because there's nothing you did. You shouldn't get credit for that which you didn't, because it's geopolitics. Don't behave, if you want to be a responsible, sustainable miner, don't behave because in 2012, I saw it, as I told you, 26% fall in one day. We declared a crisis, projects people, but if you prepare yourself now, then the impact will not be as hard on you when the gold price falls.
Ghana is losing valuable investment capital and long-term growth opportunities to countries such as Mauritius, South Africa, and Nigeria due to gaps in its private equity and venture capital regulatory framework. Speaking with Joy Business, the Chief Executive Officer of the Ghana Venture Capital and Private Equity Association, Ama Jampo, says the passing of the limited partnerships framework will position Ghana as an attractive, competitive domestic investment destination to accelerate private sector growth.
We are looking to really push as an industry that's centered on private equity and venture capital to align with other established markets and jurisdictions in terms of private equity and venture capital. We do not have a limited partnerships framework in Ghana. It means that if you want to launch a fund and have a fund domiciled in Ghana, you need to basically operate under the normal rules of the Companies Act, which isn't really ideal and it doesn't really help us to be competitive. It means that most of our fund managers have to domicile outside of the country, which is a huge lost opportunity in terms of the potential taxes, jobs, industry building, market building that we have in this country that we're losing to places like Mauritius and South Africa, for example, even Nigeria. And so the GVCA, the Ghana Venture Capital Association, is really pushing and working with Fund 24 at the Office of the President and also with the Ministry of Finance and the Venture Capital Trust Fund to make sure that the Limited Partnerships Act is passed in Ghana so that we can be a hub for venture capital, private equity and long-term investments into our domestic private sector right here in Ghana rather than losing those dollars to other jurisdictions. So
let's now go to myjoyonline.com/business for some quick read on that portal. Ghana earned less money from oil export second half of 2025. That's according to the Bank of Ghana. Also on that portal, you see scheduled exit from IMF program. Others could influence capital flows, exchange rate dynamics. That's according to Dr. Johnson Isiama, Governor of the Bank of Ghana. Feel free, do log on to myjoyonline.com/business. I am Pius Kojo Baka, always a delight serving you.